Hi, this is Paul Drockton. I'm the publisher of MoneyTeachers.org. I also own Drockton Development and Drockton Mortgage. And the reason for this recording is basically to help uh, individuals that are trying to find a safe place to keep their money during times of turbulence, which is obviously where we're at right now. One of the things that we need to look at, of course, is that in the United States, we've relied on the dollar, and the dollar's always been strong, not only here in the United States but also internationally. But the reality is that the dollar's gone from about a dollar 23 in value when compared to other currencies to where it's at today, which is around 71 cents, and that's just over the last 7 years. If you take a look at what that means is that what that means is that you and I live in a time of declining currency, which means that the dollar is going to continue to lose its value. The impact that this has is this just basically takes away um, your traditional investments. One of the first rules of investment is that you never ride a dead horse. If the horse is dead, you got to dismount. You got to get off of it. Don't ride it into the ground. The second rule of investment is you're supposed to buy low and then you're supposed to sell high. And that's assuming there is an upside. But the reality is that when you take a look at your traditional investment, the underlying investment, the thing you're really putting your money into, is the United States currency. I mean, let's just take a look at that. For those of you that like the bond market, that like to invest in savings bonds, that like to invest in your savings account, for those individuals that like to invest in money market accounts, for those of you that like to invest in treasuries, or even that buy long-term or short-term debt, these are all based on the value of the dollar. And the reality is that as the dollar continues its decline, then what that will do is that is going to raise interest rates, which means your current investment will become uh, basically more and more worthless, or it will continue to lose value. So then the question then becomes, what is the smart thing to do in today's economy? Well, first of all, the smart thing to do is to realize that um, if the horse is dead, it ain't coming back. You and I aren't going to resurrect it. And what that means is that you got to find another horse. And sometimes you need to look in places where most people won't. And what I'm advising my clients right now is to take a good, hard look at gold. Now, the nice thing about gold is that even at its current value, which is about $980, I'm sorry, $909 an ounce, it's still an extremely cheap bargain, and I'm going to explain why. If you take a look at the total amount of gold that's available in the world, I can take every ounce that's ever been mined, and I can put it into a tennis court that's about um, 21 feet high. Every ounce that's been mined since man has been on this earth would fit in that small area. So one of the rules of investment is you want to find something that has a very limited supply and a very high demand. Gold has been ignored because what's happened is that the central banks have bought up about 80% of the gold they've held in the reserves. And the reason they've done this is because they want us to use their paper, the paper currency. And obviously, the best way to do that is to try uh, to either control the supply or to control the demand of the competition. Gold is the dollar's competition. Gold is the euro's competition. Gold is um, every paper currency in the world's competition. And so the point is, if you've been following gold, gold has gone up 36, 37% just over the last 12 months. And it's just beginning to climb. If you take a look at where it was at in 2001, it was at around $290 an ounce. At that time, the central banks had about 300 trillion ounces in reserves. Over the last year, they've dumped half the reserves in an attempt to suppress the price of gold. So it's, what we have is we have an artificial supply that's been dumped on the market. What that means is that the central banks have literally sold half of their gold reserves. And what that means is that they've done that in a very short period of time, and in spite of their best efforts, gold has gone from $290 an ounce over the last 7 years to $900 an ounce today. It's outperformed every other investment um, outside of real estate. Now, the reason I'm explaining this to you is because there's a right way and there's a wrong way to hold gold. I can explain how you do it, how to buy it, how to store it. There's tax advantages if you do it right. Um, you can actually use it to fund your IRA as long as you pick the right type of gold, and you can get a tax deduction. You can take all your other investments if you want, your mutual funds, which have to be losing money right now, your money market, which has to be losing money right now, your savings, which has to be losing money right now, and you can invest that in the right type of gold. But you need to know what you're doing. You need to know what you're doing. And the beauty of my organization, moneyteachers.org, is that we don't stay on the same horse. I will always tell you which horse is running the fastest, which horse you want to be on right now. And I will always make conservative recommendations. My goal is to minimize your risk and obviously to give you the best return you can without exposing yourself to risk. Now, I don't sell gold. I'm not looking to make money as a gold dealer. What I do is I sell advice, which is financial planning in its purest sense. There's no commission that you're going to pay to me on your gold. I'm going to show you directly where to go, the source, how to negotiate the price, how to basically use it to fund your IRA, how to store it, how to hold it, everything, how to do everything the right way so you don't get in trouble. And basically, you'll find that the recommendations that I give you will and have been backed up by some of the greatest financial counselors in the country right now. As a matter of fact, I can tell you this: I counsel NFL players, and I counsel other professionals, other individuals that are high net worth, and I work with these individuals, and basically I've helped them make the transition into what I'm telling you right now, which is gold. So if you're interested in learning more about how to buy gold, please go to my website, which is moneyteachers.org, and you'll see that you can buy the course with the slideshow presentation. It's awesome. I just received an email today from a professional athlete thanking me for the information. And then I laid it on and told him what to do. He's extremely grateful. He's going to pass it on to his friends. So when those that have money start listening and doing what you tell them to do, and when those that have a lot of money listen to you and ask you for your opinion, then you know what you're telling people is the right thing. So anyway, you want to visit moneyteachers.org. The name of the course is Gold, Buying, Selling, and Trading. The price of the course is $19.99. Now, if you act today or tomorrow, the deal is going to be the same. Not only am I going to send you the slideshow on how to buy, trade, sell gold, but I'm also going to send you the slideshow that will teach you how to buy, sell, and trade silver. So basically, what you're getting is you're getting a $40 value. Actually, it's worth a lot more than that if you sat down with me one-on-one. What you're getting is you're getting literally perfect advice on the right investment today, 2008. Where are you going to make your money? And you're paying $40 for it. Now, that's as good as it gets. So, if you want to email me, you can email me at pdrockton@aol.com. But I would refer you right to my website and prefer that you take a look at moneyteachers.org, and it's spelled the same way it sounds. moneyteachers.org. That's moneyteachers.org. And I can show you the right way to make money in this economy.